I'm Jason from Lions Club Property Experts. I've got Lou Christopher here, CEO and Managing Director of SQM Research and a member of our research panel. So how important do you think it is when we're looking at various locations across Australia to really focus on what infrastructure is taking place, what new amenities are being introduced to the areas, etc., what big projects are taking place?
There's no doubt infrastructure is a critical factor, or new infrastructure can be a critical factor behind dwelling price performance. I've seen it time and time again, particularly when it comes to new toll roads. That's certainly helped that local market that's been positively influenced by, say, the toll road, or a new hospital or a new university that's gone in. All that generally can assist the local housing market, provided that, once again, we're not talking about a situation where that local housing market is well and truly oversupplied. So it's, infrastructure on its own, or the improvements and amenities, are a good thing and definitely help the market, but you still need to consider everything else that's going on as well.
Absolutely. And look, some clients do ask the question, is this something they should focus on? Just because there's some infrastructure going in there, is that only going to be short term, right? So is that area going to continue to perform well beyond that project being completed in that location, or am I just going to see a little bit of a spike in growth? But I've certainly experienced it. I've seen it also with my mother, who has a home in Burwood here in Melbourne, and they put in the East Link and they upgraded the Ringwood shopping centres in the area, and her prices just went through the roof. So
yes, and we did a study a long time ago on the benefits here in Sydney of the M2, which came in the 90s, and how areas in Sydney's northwest, such as Baulkham Hills and Castle Hill, benefit from that. And it was pretty clear that for a long time in the lead up to the opening of the road, and after the road, for about 5 years after it opened, there was a clear pattern of outperformance, which could easily be attributed towards the expansion of the M2.
Yeah, absolutely. And in terms of some of the clients or viewers wanting to do a little bit more research there, what's the easiest way for them to jump on and get a bit of a feel for what's in the pipe in terms of considering a new up-and-coming location with regards to infrastructure?
Well, I think it's important to understand what is going on with what is actually planned for the local area. And you can get that information off local council websites. You can also go to the state government website. So New South Wales has got a great website which covers off all the major projects that are happening statewide and some of the localities which are going to be invested in. It's predominantly government websites which give you that understanding of what local infrastructure is actually coming or it's just been completed.
Yeah, absolutely. And then for those who are watching too, with all the location region reports that we produce, we also do all that research for you guys. We put a list of up-and-coming projects, either approved or in progress, or planned, so you can have a look at those reports as well. Another good indicator is sentiment. What does the market think? Where's the confidence at in terms of investing in our property markets? Where does that sit? What are your thoughts on some of those indicators outside of the obvious one, which is auction rates?
Yeah, we definitely pay attention to auction clearance rates, keeping in mind that, look, there's some weaknesses with how some of those indicators are actually put together. We also look at stock on market, so total listings in the marketplace. So we provide a series on that. That's a leading indicator. It gives you a really good understanding in terms of what supply is actually doing, what current supply is doing, that is. So generally speaking, we see a stronger market when supply starts to fall or listing starts to fall, and a weaker market when you start to see continuing and ongoing rises in listings. And on that front, there is a bit of debate about that, because some people believe that when you see a surge in new listings, that's actually a healthy thing for the market. It's a sign of strength. And we don't disagree with that, but we actually look at total listings and we actually give a split between new and old listings. So when you see old listings really rising, it shows that absorption rates or buyer rates are actually falling away because that stock isn't moving at all.
Mhm.
So, and when you start to see old listings start to fall away, like we are seeing now, it's definitely a sign that buyers are willing to meet the sellers that are out there and buy that older stock.
Yeah, because look, at the end of the day, it's just supply versus demand, isn't it? So,
It is. That's right. So yeah, that's one indicator we closely follow. We like watching asking prices as well to see what vendors are actually doing, whether they're feeling confident or not. Funnily enough, we find that vendors can often overall be quite reactive to the market. And they will move with the times. Of course, as I'm sure you're well aware, there are many vendors out there that are very stubborn. But nevertheless, the overall vendor market is they generally are reactive to market conditions. So asking prices are a good indicator to watch. And then back onto the demand side, the ABS produces this series which is called Housing Finance Approvals.
yeah.
So the strength of credit, which we haven't really discussed up until now, is definitely a critical factor. So housing finance approvals rising, that means that more and more people are going out there taking out a loan, which is generally a sign that the market's about to get stronger. And for sure, right now, we're actually seeing that occur.
Absolutely. Absolutely. Well, Ronnie, thank you so much for joining us today. You're a wealth of information. We really appreciate the data that you provide to not only ourselves, but to our viewers and our clients. And we're very grateful to have you on the panel. And I look forward to chatting to you again soon.
Thank you. Nice to be with you.
Fantastic. Thanks, mate. Cheers, bye.